This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, it is the gallant Rob Reinhold.
Well, hello everybody. It is great to be here with you. Let's get inside that brain of yours and see what makes you tick.
Yeah, and we're going to go back to basics a little bit with this episode and talk about just simple trading mistakes. I don't think we've really spoken too much about it, or at least we haven't dedicated ourselves to it. But as we all know, mistakes happen as you get more experienced in this field. They should become less and less. And as I always say, you should be documenting these in your journal. It is the single most important part of your trading journal. And if you guys aren't doing this, then you're not doing things optimally. And the margin of error is so small in this business that if you're not doing things as optimal as you possibly can, you're really hurting yourself in the end. So I will assume that you are chronicling these mistakes. And Rob and I are going to talk about what to do about them from a technical perspective and from a psychological perspective. And Rob, go ahead and just take it from here.
This episode is very interesting because at first it seems like it's not that big of a deal because we have been talking about so many huge trading mistakes. What we're really talking about here is those little trading mistakes like you hit the wrong button or you did something a little bit like that. The reason why we're covering that here in a psychology podcast is that we don't want those little mistakes that are bound to happen to get into your subconscious and then create a large psychological problem. So at first it seems like a pretty simple thing, but when you really get into it, there's quite a bit of depth into handling these situations.
And so for further reference, hitting the wrong button. So I'm thinking, some good examples of this would be hitting limit instead of stop, or putting a decimal point in the wrong place in your stop or your take profit. This is kind of what you're alluding to, right?
Correct. Yeah. Technical mistakes. So again, this episode is going to be about technical mistakes, not psychological mistakes. We've covered those in depth and we're going to keep coming up with more and more episodes. But this is what happens when you fat finger it. What happens when you get a decimal point wrong? Let's make sure that that doesn't cause a psychological issue in the end.
Okay, good, perfect. And before I forget, if anybody who's listening to this on YouTube or wants to go to YouTube, if you have a funny story or just a battle story about how you did something like this, because I guarantee you, if you've been in this industry for 6 months minimum, you have absolutely done this at some point, no matter how meticulous and precise you are. I consider myself to be a very meticulous and precise person when it comes to things like this. We've all done it. We've all done it multiple times. So put your stories down below if you have one, and we'll go ahead and get started here.
I was trying to think of a good story of mine, but it's like one of those things like you've made so many of these that they've all just blend together. And really what the big deal is, and this is what this episode is going to be about, is that in the end, they didn't matter. They didn't really matter as long as you handle them correctly. So the first thing that we need to start out with is to totally understand we are human. We are going to make these little mistakes every now and then. Do not beat yourself up over them. Do not. They're guaranteed to happen. Some people are going to make them more than other people, but everyone, as Patrick said, is going to have this little issue. So first off, don't beat yourself up, because again, beating yourself up, then all of a sudden you get into that negative psychology to where then it's like it cascades into a much bigger problem. You really just have to take a look at it and say, okay, oops, it happened. What do we do next?
Yeah, and I'll even say it right now. This happened to me not even 3 weeks ago. It wasn't on trading. It was on investing on my Schwab terminal. And I made a mistake. I meant to buy this stock right around 40 cents. Not 40 at the time. It was more like 38 cents. I wanted to catch it if it went to 40. Put in some wrong information and completely missed it. I went back the next day, wondered why I didn't have any, and now it's sitting around 57 cents. Not even 3 weeks later. Lesson learned. Again, I've done this so many times, but you still feel like the biggest rank amateur doofus every time you do it. But just know, it's common, and even people who have done this for a very long time are doing it too.
And one thing I want to point out with your story is we talked a little bit about survivorship bias and how we remember the things that hurt us, but we don't remember the things that helped us. You could have easily put that in the wrong. The stock could have gone the other way. You never got filled. And you'll forget that one. You'll forget that one every single time, but you'll remember the ones that got away or made you have some sort of loss. Understand that these are going to help you and hurt you at an equal amount over your trading career as long as you handle them both the exact same way. The good ones and the bad ones. So first thing is stay calm. When you discover that you have made a trading mistake, a technical trading mistake, stay calm. And again, this is where you then just go into your plan. We're going to go over a couple of different ways to handle this. It's really great if you can pre-plan what you're going to do when you find these mistakes. So for example, you put in a stop order and you thought it was good to go canceled. You check the next day, your stop order is no longer there. What is your rule for that? Now, obviously, that's a pretty simple one. You just put it back in. But there's going to be other little situations where you can predetermine what it is you're going to do. So when it does happen, you don't have to think about it. It's already predetermined. My advice is to take a little bit of time and think about some of the possible mistakes that you can make with your finger. That sounded really dirty. Let me say that again. Some possible mistakes you can make in your trading and the solutions you're going to have from those.
Okay, good. And if you could, just a little request from me, talk about maybe those mistakes you discover quickly and maybe those mistakes you don't discover for a long time. I know that's got to be pretty hard to do, right? But I've told this story several times. My very first year at Maverick, that dollar CAD short that I got in by mistake because I didn't. Something to do with the stop loss or the take profit. I didn't. It was the stop loss. I didn't. Back then, interactive brokers want you to confirm everything 500 times, and I confirmed 499 times, and my stop wasn't there. And I went from a winning trade to a very, very big losing trade in my very first year of being a prop trader, and it was a hole that it was going to take a really long time to dig out of, not to mention what I felt you guys were thinking on the other end. So things like that, compared to me just fat fingering something and figuring it out the next day, those are two really different avenues to travel in my mind. So I'm very curious to hear what you have to say about this.
I think you make a great point. There's that mistake you make where you are there, you click the button, oops, I hit sell instead of buy. Those are very easily corrected. The ones that aren't easily corrected is when you find them later. Now, this is the dangerous one. These are the dangerous ones. So let me just quickly cover what to do and how to handle it if you make let's call it a fat finger mistake, where you're there, you see the mistake. You want to minimize the damage. You just want to minimize it. Even if it's going for you, going against you, you want to unwind that as fast as you can and with as little cost as you can. Depending on what you're trading, this is going to be a little bit more difficult. If you're trading Forex is awesome. Very, very tight spreads, very low commissions. Again, if you pay any, a Forex fat finger trade should be fixed immediately because the costs are so small. However, if you make a mistake on like a wide spread in options trading, you may not. The cost to fix that is actually going to be fairly substantial, and then you've got a little bit of a decision to make. But if it's a fat finger, go ahead and fix it. That is a very easy decision to make. When it gets a little bit more complex, and this is where we're getting to the psychology part, is where you discover you made a mistake and your P&L is either in the green or in the red. Now, let me tell you what I have seen hundreds of times in my life. I've had a great opportunity to overlook all the traders and see how people handle things. And it's amazing. This is what we do as human beings. If you make a mistake and it ends up in a green P&L, Patrick, how fast do you think that P&L was taken?
What do you mean, how fast was it taken?
Again, how fast did they exit that position when they found they made a mistake and it was a positive trade?
Oh, compared to if it was a negative trade, they probably sat on it. They took the gift and they're like, well, let's see where this goes, right? That's what a normal person would do, huh?
No, that's good. That is a good answer. It's just the opposite. What I've seen is when people make a mistake, it's been a day or so, they log into their account, they say, oh, I made a mistake, and they're up a couple $100. They get out of that trade immediately. And they think, oh my gosh, how great was that? I lucked out. Made a couple $100. They do that again, and now they're down a few $100. And they find and discover the mistake. They are much more likely to sit on this trade, which is the absolute worst decision you can make. So just think about this. Let's say that this is going to happen 20 times in your trading career. Half the time it's good, half the time it's bad. But if you're immediately selling the good ones and then holding the bad ones to see if they, quote, can recover, you will absolutely be a negative because of these trading mistakes. If you treat them both the same every single time, then it should be no effect. But what I've seen is when people discover they've made mistakes and they have a gain because of that mistake, they are so excited to get out of it. And then when they find out that their mistake created a loss, they want to hold on to it and see if they can get that money back. That's the psychological trap of these trading mistakes.
So let me see if I get this straight. You're saying we should handle them the same way. Here's how I would do it, and let me know if you agree with this methodology. So if I make a mistake and I come in and I am in the green, and pretty good in the green, what I'm going to want to do is, because I don't have any real rhyme or reason to why this current trade is on, so I don't have any structure behind it on top of that. So I'm just going to put my stop loss at break even and put a scale out take profit in a reasonable place and let that sucker run. Let's see what it can do, right? If it hits break even, well, I wasn't supposed to be in that trade anyway. So that's how I would handle that. On the other side, if I made a mistake and I was in the red, I'd be like, ooh, bad mistake, abort, and immediately close that trade down. But those are two different things. That's not the same thing. Is my ethos what you were describing, or were you describing something different?
Your answer was actually the correct question. One of my favorite sayings that I love to tell traders is the best way to know if you're in a good trade or not is if the trade is profitable. Now, we've all made a trade where we click the button, and as soon as we click the button, we never saw green. We never saw a shred of profit ever. And those trades, they don't come back. They usually get stopped out on those. And the ones that go for you, those are the ones that are good. So what you did, Patrick, is exactly what you should do, is you looked at this and said, hey, the fact that it's in the green, I want to give this one more room to run. And this one that's in the red, I want to stop the bleeding immediately. That is the correct way to look at it. But what I'm telling you, I've seen so many traders do this. They do the opposite of that. They sell the winner immediately, and then they hold on to that loser to see what it can do. That's the real psychological trap here that I want to discuss.
Why do you think that is, though? Because it just doesn't make any sense to me. Usually, if the trade is going the wrong way, let's say I would have been right, but I picked the wrong direction. My ego is telling me, well, let's get out of there and maybe start over again, or maybe start, if that was a euro yen entry, maybe see what's going on over at euro pound, see if I can maybe get a similar entry, something like that. I would be like, I don't think the market's going to go this way much longer. So let's correct course here and get it going right again. I mean, that just seems logical. I don't think I've ever not thought that way. What do you think's going on with these people who are doing it the wrong way?
I remember reading a study someone did about found money. When people found money, they treated it much differently than the money they had in their pocket. And they were much more loose with it. And so this is kind of that found money thing where you made a mistake and you log into your account and you see you've got $80. People are very quick to take that. But again, when they see that loss, they punish themselves like you made a mistake, you got to get it back, work on it, try something to get it back. It's just a very negative downward spiral. And one of the most common ones I've seen in options trading, and any of our options traders out there, I bet you have some horror stories about this. So with an option, when the option expires, if the option that expires is in the money, meaning it has value to it, your brokerage automatically exercises it over the weekend. Now, there's been times where I've been busy, and at 3:55 p.m. Eastern Time, I look at my option. Let's say I've got a $50 call, and let's say that the stock is trading at $49.60. And I say, oh, you know what? There's no way that's going to get exercised. Within the last 5 minutes, it has a big run, and I don't notice it until the market's already closed. I will have that stock put to me or called to me on Monday morning. I didn't want it, but I've got it. I have seen so many people get put stock to them on Monday, they don't get out of it, and it becomes the biggest loss they've ever taken. But what I've never seen is it gets put to them on Monday and it becomes the biggest gain they've ever seen. That's not what happens. You have to just look at this and say, I need to do it consistently. Whatever you do, you need to do it consistently on both ends. Patrick, I love your suggestion on winners. Hey, you know what? Winners, I'm going to put a stop in a break even and let's see if it can make us some extra money. On losers, I'm going to cut them right away. Those are great rules. And what you can then do is you can track these trades and see, did you have a positive expectancy over the few mistakes you made? And if that is so, you have the numbers to prove the way you're doing it is correct. If you don't have those or not willing to look and see if your rules are going to have a positive expectancy, which is going to be very tough because you're only going to make a few of these every year, my advice is do the same thing every single time. That way you at least basically get a zero. Now, some people are going to have good luck, some people are going to have bad luck, but out of the collective whole of traders, if everyone just automatically, like on Monday morning, automatically exit any stock that you were put over the weekend, you do it at 9:30 and 1 second. If everyone did that, the collective whole would be break even. But people don't do that.
Okay, well, good. Let's extrapolate that out a little more then. And we've gone over the reasons why people might make mistakes. Bottom line, the mistake has been made. Okay, it's been made. You've recognized it. Now let's lay out exactly what to do. So you have a blueprint already printed out here. Let's go ahead and go over it, starting with what to do if you make a mistake on the entry.
Let's talk about the things that are non-negotiable. So there are a lot of things you can do to make mistakes, and you can say, okay, well, I'm going to do this and this, but there's two things that are absolutely non-negotiable. Position sizing mistakes. You must correct a position sizing mistake immediately. Now look, if you made the trade too small, correct it. It's not going to be all that risky to you. If you made the trade too large, you need to correct that immediately. That is just, you cannot mess with that one. You have to be perfect on that. Position sizing must be perfect. Number 2, your stop must be active. It just has to be active. And if for some reason it's not active, you just have to make it active. So those are the two things that, to me, there's no wiggle room. There's no anything. Like if you screwed those up, pull the red lever and make sure you get that right. Other than that, if you made a trade and it was a mistake, you were long instead of short, or this or that, guess what? Now you've got your money there. If you can unwind it quickly with no penalty or just minimal penalty, take it off. But if you cannot, guess what? This is now a trade of yours. As long as you have your position sizing and your stops in the right place, this is now a trade. I have done this over my career to where I make a mistake. Oh, great. I'm short instead of long. I wanted to be long, but now I'm short. I make sure that I have all my stuff in place. And some of those have turned out to be fantastic trades. But again, position sizing must be perfect. Stops must be perfect. Does that make sense, Patrick?
No, it does. And I want to co-sign on that position sizing part you mentioned because, yeah, if let's say you're a half lot trader, for the most part on major pairs, and you accidentally wager 5 lots, abort. Forget everything I just said about if your trade is in the green. Just get out of there. You are in an incorrect trade that should not exist. Get out of that. But yeah, everything else you said makes perfect sense to me. So that's what you would discover on the entry or just after the entry. Now, what about the exit itself? There's a little different protocol here, is there not?
There is, but there really should be no problem with the exit because everyone should be automating their exit. So, like, even if let's say you screwed up, you put in a buy instead of a sell, your stop order isn't going to go in. It's not even going to go in correctly because that's such a screw up. If your exits are handled by stops or by some sort of automation, just let that happen. If you are doing discretionary stuff, if you're trying to do discretionary stuff, let me tell you, you need to automate.
And why would I need to automate? I've been doing discretionary for a long time. Why all of a sudden should I switch it here?
Discretionary exits?
Oh, you're talking about the exits. Okay.
Yeah, the exits, just automate that. Just make it to where it takes care of itself. For any of you that are following our Flat Earth Trading Society, I mean, this is just such a great exercise of not even thinking about selling. We never think about closing about position because we just have a 2x ATR trailing stop that we periodically tighten up. And every single trade has been just taken care of. It's just taken care of all the time because you've already done it the right way. Once it's automated and in there, you really can't screw it up. Now, you can screw it up putting the order in. Then, of course, you fix it. But once that order's in, once you put in your, and again, I'm going to use the Flat Earth Trading Society, 2x trailing ATR stop. Once you get that right, you can't screw it up after that. You literally can't screw it up.
Yeah, that's true. I think a lot more mistakes probably happen on the entry, but if for some reason they're happening on the exits, I mean, I've said it before in my exit indicator videos, exits are where all of the profit and losses happen. So if you're messing this part up more than, let's say, once a year due to some just technical issue, then yeah, it probably is your signal. You know, the universe is telling you to automate this. Might not be something you want to do, might make you feel like you don't have as much control, but if you can find a way with your algorithm, and there are ways, you can go to my Discord forum and ask, they'll tell you how. This is something you probably need to go ahead and do.
Right, that is good advice. The biggest thing that I wanted everyone to take away from this episode is you are going to be tempted to hold on to the bad ones. When you make a trading mistake, you're going to be tempted to hold on to those bad ones. Don't do it. I have seen one trade wreck an entire year's worth of work. And it was a trade they didn't even want. I mean, that's the ridiculous thing. They didn't even want the trade, and they turned it into, their holy grail thing that they were going to hold till they died. Look, just do not hold the losers, please. That's all I've got, Patrick.
Yeah, I would just say if you find yourself making a mistake like this, regardless of how deep into your career you are, step one, don't panic, calm down. Step 2, come to this episode, and we will tell you exactly what to do and lay it all out for you, just like we did. But thank you, everybody, for joining us once again on the Trading Psychology Podcast. Rob and I will both see you next time.
Goodbye, everybody.